Hello bro and welcome back to the new video. So as you can see, today I'm recording myself. Today we are trying something new because I was thinking that if I record myself bro, then that increases the personal approach a bit, it's more personal for you and for me, so it's just better, okay? So let's see how it goes. This is my first time. Maybe it's going to be a bit shit, but I'm here to practice, I'm here to learn as well, okay? Now let's leave that aside. You maybe think that I'm recording in myself in the kitchen. You might be a bit confused. Yeah, that's true, bro. I'm recording myself in the fucking kitchen because it's currently like 6:30 in the morning and I don't want to wake other people up here in the flat. It's that simple, okay? But nonetheless, let's leave that aside because today we are going to analyze CME Group Incorporated with the stock ticker SME. Now, as always, we are going to analyze the stock using our little Canva presentation that we have right now here. So let's begin, okay? First of all, why should you even listen to me? Because I'm some random guy that you found on the internet. So my name is Yasha, bro, and I help young men from middle class invest in the stock market and actually make some money with that, okay? So if you are interested in that, click the first link in the description and we see each other there, okay? Now let's begin with the actual analysis. This is going to be very simple, straightforward, beginner friendly, without any wasting time whatsoever, because I don't want to be like your broke professors on your business university who just talk shit and don't teach you anything whatsoever, okay? So now let's begin. As a complete beginner, you should generally care about the following things when you analyze stocks, okay? You should care about the chart, profit, debt, money on the bank account, value, and price. Now, first of all, bro, CME Group is actually stock exchange. This is one capital market that was founded in 1898. I hope I pronounced that correctly. And they are trading with futures. So basically, future is some stock market buying thing that you buy right now for one price and then you hope that the price will go up in the future and then sell it for higher price, okay? It's that simple. Now, I didn't know that you can also invest in the stock market. I didn't know that. Oops. I learn something new every day as well, so that's the beauty about the life, okay? Now let's begin with the analysis. So here we have chart as always, okay? And as you can see here, the instruction, the chart has to grow for all 10 years. Now, what exactly does that mean, bro? That means that I will first of all draw a little exponential line, kinda like this. And then we are going to compare the actual stock price chart with this exponential growth line, okay? So we are going to compare the orange line with the black one, and preferably they should follow each other, okay? And what do we have here? You can see that the growth is actually quite similar, both end chart, stock price chart, bro, is following the exponential growth line, except right now here in the last 1 year where it's kind of similar. But generally, the stock is growing exponentially. This is what we want to see because we want to invest in stocks that are growing, that are growing exponentially, because that will give us profit. It's that simple, okay? Now we come to the profit. And for the profit, we have also a little instruction that it has to be in plus and it has to grow through the years. Now, here is the very same story, bro. I will draw a little exponential growth line, kind of like this. And then we are going to compare the profit chart with this exponential line. And as you can see, bro, the profit follows that line quite good. It grows through the years, it's exponential through the years. So that is what we want to see as well, Now, I don't know what happened in 2017. The profit was massive. I didn't do an in-depth research on my own, but if you want, I can do it. So let me know in the comments, okay? Now we come to the debt. And for debt, we have an instruction that tells us debt has to be low and preferably, bro, it has to decrease through the years as well, okay? Now, debt should look kind of like this, as I'm drawing right now on the chart, okay? But actual debt, bro, it was first of all a bit similar, a bit like stable, and then it increased, decreased, and then it increased again and stayed stable. So as you can see, bro, the debt is kind of growing, kind of like this on average. So that is what we don't want to see, bro. We want to see decreasing debt and not increasing one, okay? So debt is not good. Now we come to the money, and with the money I mean literally money on their bank account. Now what does that mean, bro? That means that This is literally the money that they have on their bank account. For example, when they want to go to ATM machine and withdraw that money, they go there and take the cash. Just like you, when you want to go on a date, you take 20 euros from your bank account, you go to ATM and you take it. It's that simple. So here we are measuring that exact money, okay? How much do they have? That's what we are looking for, okay? And preferably, bro, wait, I cannot see. They have to have more money than the costs, okay? Now, how do we measure if they have more money than the costs? Bro, use your brain, you are not stupid. Look, they have plus $3.3 billion on their bank account. So when you go to the bank, that's how much they have on the bank account. It's that simple. And if they have plus right now here, that means they have more money than the costs. Otherwise, they would be in minus, obviously. Now, bank account is something that I like to measure because you don't want to invest in companies that are fucking broke, okay? Just like with you and the girls, if you don't have money, the girls will not have sex with you. It's that simple, bro, because women want the money and women want to have fun, and then if you are broke and fat, nobody will want you. Same right now here, okay? We want to have companies that are amazing, that are rich, that are performing good, so that they can take care of us in the future when we buy the stock and then sell it for $1 million later, okay? Now that was a bit of a joke, but you know what I mean. We want to have money on the bank account. That's a rule of thumb, okay? So here we have it, so that's a good thing to go, okay? Now we come to the value, and obviously we want to invest in stocks that are undervalued. Now, how do we measure valuation? We measure it by two little things. First one is P/E ratio, and the second one is called intrinsic value, okay? Now, those are some things that we stockbrokers, we stock analysts, we are measuring them, but generally those are the concepts that show you if the stock is overvalued or undervalued in terms of the competition, okay? Now, P/E ratio, as a complete beginner, bro, you don't have to understand that, but you have to know that P/E ratio should be lower than 15 and intrinsic value should be higher than the current stock price, okay? Now, as you can see here, bro, the current P/E ratio from CME is 22, which is slightly higher than 15. So in terms of the P/E ratio, bro, the CME is a bit overvalued, okay? And now we come to the intrinsic value, and here I want to have your full attention because this is extremely important, okay? Now, intrinsic value, if I can explain it a bit simpler, actually means the price that the stock should have at this exact moment, okay? Now, what do I mean by that? So, look, based on some calculations that are in the background in terms of like income statement, balance sheet, and cash flow statement, bro, the current price of CME should be $146, but the actual price is currently $196, so $50 higher than it should have been. Now, what does that mean, bro? Based on intrinsic value, the stock is for $50 overvalued. So we don't want to invest in that, okay? Because obviously we want undervalued stocks, okay? Now, intrinsic value, bro, explained simple. I know that I'm repeating myself, but this is very important to understand. Intrinsic value tells you the price that the stock should have right now, and then the current price is just the current price, okay? It's that simple. Now we come to the price, bro, and for the price we have a little instruction that price has to be always lower than 150 euros or $150, probably you're from America, so for you is the dollars. And the current price, bro, is around 200, which is higher than 150, so we don't like the price at all as well, because it's a bit overpriced, okay? Now, $150 is one border that I decided by myself, it's kind of the border between overpriced and underpriced stock, and for me, bro, as a rule of thumb, whatever is higher than 150 is a no-go for me, for sure. It's way too expensive. I don't want to spend money, I want to make money. It's that simple, okay? And now we come to the final evaluation, bro, where we are just going to summarize everything that we have known so far, everything that we've done in terms of the analysis of CME. Now let's begin with the chart. So does the chart grow exponentially? Yes, it does. If you don't believe me, go a few minutes back and you will see the video from the beginning where the chart grows exponentially and it follows that black line, okay? Now we come to the profit. Does the profit grow? Yes, it does. Now debt is also unfortunately growing, so this is what we don't want to see. They have around $3.3 billion on the bank account, so that's a good thing. They are overvalued in terms of the P/E ratio and intrinsic value, so this is what we don't want to see. And the stock is a bit too expensive. It's around $200, which is higher than 150, okay? Now, should you buy or sell this stock? In my opinion, bro, even though the stock is overpriced and a bit too expensive, I think that you should at least put it on your watch list, bro, because the financials are absolutely amazing. Look, here I can show you my a bit more detailed analysis, and here you can see everything is growing. Total revenue is growing, operating income is growing, net income is growing, everything is growing, bro. I absolutely love this. They are reinvesting more and more money back. You can see right now here, bro. They are profitable. They have more than 10% in profit, so that's an amazing thing to see. Then they are paying higher dividends every single year. They are reinvesting the money back. So yeah, in my opinion, bro, you should put this stock on a watch list. It's an amazing company or stock market. I don't know how to say, bro. So yeah, put it on a watch list, and then when the price goes a bit lower, then I think you can enter it. It's a nice company. They are making profit. They are growing. This is what we want to see. They have money. That's about it, okay? Now, if you want to know more about stock market investing and actually make some money, click the first link in the description. Click subscribe if you want to know more about stock market analysis, bro. Do the hard work, champion, and see you on top of the world.